Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst stock. Today, we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath. Today, we are setting out on a very specific mission. We are unpacking Oklo.
Yeah.
For those of you tracking the energy sector, you know this is a pre-commercial advanced nuclear technology company. And right out of the gate, there's this fascinating, almost glaring contradiction at the heart of this stock that we really have to talk about.
Oh, absolutely.
Because on paper, Oklo currently has no significant revenue, none.
Right.
They are operating with negative free cash flow. If you look at a traditional screener, that might just make you pause or run the other way.
Usually, yeah.
Yet at the exact same time, they boast this absolutely massive 15-gigawatt order book.
It's staggering.
It is. Just to put 15 gigawatts into perspective for you, that is roughly enough electricity to power over 10 million homes.
10 million. And we aren't talking about small, speculative buyers getting in line for this, right?
Exactly. We are talking about tech titans and major infrastructure players like Meta, Switch, Diamondback Energy, and Wyoming Hyperscale. It is a massive paradox, and that's what we are going to unravel for you today.
That paradox requires a completely different analytical lens. If you are applying traditional valuation metrics to this company.
Like PE ratios and things?
Right. If you are looking for immediate profit margins or a quarterly earnings beat right now, you're going to completely miss the actual wealth building context here.
So how should we be looking at it?
This is an exploration of a long-term, multi-year hold. The target horizon we're focused on is their first commercial operations, which are slated for 2028.
2028.
Right. To understand the investment thesis, you have to look past the immediate negative cash flow and focus on the massive structural shift in future infrastructure demand.
Because the grid is just maxed out.
Exactly.
Right.
We are looking at a fundamental rewiring of how the world, and specifically the technology sector, consumes power. And that's why these massive companies are essentially reserving electricity that doesn't even exist yet.
Okay, let's unpack this. Because to understand why a giant like Meta or Diamondback Energy is betting so heavily on this, we have to look at Oklo's core product, which is the Aurora fast-fission power plant.
Yeah, the Aurora.
Now, when most people think of nuclear power, they picture those massive, sprawling plants from the 1970s.
The giant concrete cooling tower.
Oh, the ones that take 20 years and $20 billion to build. But the Aurora targets a much smaller footprint, specifically between 15 and 75 megawatts of electrical output.
Which is tiny in comparison.
It is. And I noticed they are using liquid metal cooling and non-pressurized operations. Now, as an investor, when I hear liquid metal, I immediately think of expensive experimental technology.
Sure, it sounds like sci-fi.
Yeah. So how does that actually translate into saving money and building a competitive advantage?
That smaller footprint and the specific cooling technology are actually the entire strategy. In a standard legacy nuclear reactor, water is used to cool the core. And because the core gets incredibly hot, that water has to be kept under immense pressure so it doesn't just instantly boil off into steam.
Right, because if it boils off, you have a meltdown.
Precisely. Containing that kind of extreme pressure requires incredibly thick, heavy, multi-billion-dollar steel and concrete pressure domes. By using liquid metal cooling instead of water, Oklo sidesteps that entire problem.
Because liquid metal doesn't boil as easily.
Exactly. Liquid metal boils at a much, much higher temperature than water. Because it doesn't boil off, the system just doesn't need to be heavily pressurized.
Oh, wow.
And without that intense pressure, you simply do not need those massive, expensive, heavily engineered steel containment vessels. Stripping those out drastically reduces both the construction costs and the timeline.
So if I am understanding the engineering efficiencies here, it is almost like a manufacturing shift.
It is.
Instead of trying to custom build a massive, highly pressurized grandfather clock out in a muddy field while battling the weather.
And local regulations, supply chain issues over a decade, yeah.
Right. Instead of doing all that, Oklo is essentially aiming to build high-end, standardized smartwatches in a clean, controlled factory setting.
I love that analogy, yes.
They use off-site fabrication, put the pieces together, and then just ship them out to wherever the power is actually needed.
What's fascinating here is how that manufacturing approach translates into a long-term competitive moat.
A moat is what we're looking for.
Always. The reduced construction cost is incredibly important. But the true differentiator, the thing that really sets them apart from other competitors in the advanced nuclear space, like TerraPower, is their nuclear fuel recycling technology.
Okay, let's talk about that.
They are fundamentally changing the definition of nuclear waste. The Aurora fast-fission technology is designed to take used nuclear fuel, recycle it, and actually convert it into fresh fuel.
I want to pause on that
Yeah.
because that seems like a massive historical shift.
Oh, it's monumental.
For decades, the United States government has spent billions upon billions of dollars trying to figure out where to safely bury nuclear waste.
Yucca Mountain, all of that.
Right. It has been this incredibly politically charged debate. If Oklo is essentially taking that toxic waste and running their plants on it, they aren't just solving a corporate energy problem.
No, they are offering a private market solution to a 70-year-old public policy nightmare. They are taking a massive toxic liability and turning it into a premium asset.
That's brilliant.
And from a pure operational standpoint, this recycling capability allows for decade-long refueling cycles.
Wait, decade long, as in 10 years?
10 years without refueling. Think about a traditional reactor. It usually has to be shut down every 18 to 24 months to swap out the fuel rods.
Which means it's not generating power.
Right, which halts power generation and costs millions of dollars in downtime. Because Oklo can run on this recycled fuel for a decade at a time, they're projecting greater than 90% capacity factors.
Let's define capacity factor real quick for those tracking the energy grid metrics. Simply put, a capacity factor of over 90% means the power plant is generating its maximum electrical output more than 90% of the time throughout the entire year.
Wow.
In the energy world, that is the holy grail. Wind and solar might have capacity factors in the 20 or 30% range.
Because the wind doesn't always blow.
And the sun sets, exactly. When you combine the inherent safety of the non-pressurized liquid metal design with a relentless, always-on efficiency, you create a moat that is exceptionally difficult for competitors to cross.
Which brings us to a very practical, immediate question for anyone looking at this stock today.
The financials.
Yeah. We established they have zero revenue and negative free cash flow right now.
Yep.
How does a company actually stay financially afloat while they're navigating the red tape to build these hyper-advanced fast-fission reactors and waiting for that 2028 commercialization date? How stable is the ground they're standing on today? It is the most critical question you can ask as an investor looking at pre-revenue companies. When a company's in this phase, you have to evaluate their balance sheet stability differently.
Right, you can't just look at sales.
You cannot look at sales figures. You have to look at their cash runway and, more importantly, their institutional validation.
Who is backing them?
Exactly. Oklo has secured massive validation from the highest levels of the U.S. government. For instance, they were granted Department of Energy site use permits all the way back in 2019.
Okay, so they've been at this a while.
Years. Beyond that, they have actually been awarded recycled fuel from the Idaho National Laboratory.
And the Idaho National Lab is essentially the epicenter and the gold standard of American nuclear research. Earning their stamp of approval is no small feat.
It provides immense credibility. Furthermore, Oklo has been selected to participate in the Department of Energy's reactor pilot program.
What's the focus of that program?
It's specifically focusing on providing power for AI data centers. This level of deep government backing and integration is crucial because it significantly minimizes their near-term need to take on toxic debt.
Toxic debt being those highly unfavorable, high-interest loans that desperate pre-revenue companies often have to take just to keep the lights on.
Right, the kind of financing that ultimately dilutes and punishes early shareholders. Oklo has institutional support holding up the floor, allowing them to avoid those predatory funding traps.
And from what we can see in the filings, they are aggressively reinvesting their existing capital into regulatory progress.
They are.
They're actively doing the hard, tedious work of getting through the bureaucratic red tape. If you look at the Nuclear Regulatory Commission's database, specifically their Phase 1 pre-application filings.
I think the docket is ML252TOA124.
Yes, docket ML25222A124. If you look at that, you can see Oklo isn't just making theoretical promises, they are actively passing technical reviews. Plus, they're putting capital into physical infrastructure.
Like the facility in Tennessee.
Right, a recycling facility in Oak Ridge, Tennessee. They seem to be building the foundation now so that when 2028 arrives, they're ready to flip the switch, not just starting to file the paperwork.
That regulatory first-mover advantage cannot be overstated. In the commercial nuclear industry, the regulatory barrier to entry is arguably much higher and more difficult to navigate than the technological barrier.
I believe that.
Designing a great reactor is only half the battle. Getting the government to legally let you turn it on is the real hurdle. By front-loading this highly capital-intensive regulatory work and by aligning themselves so closely with the Department of Energy's goals, they are fundamentally de-risking the future commercialization phase for their investors.
So they are checking all the regulatory boxes, they have the government validation, and they are building the physical recycling facilities.
Yes,
But a reactor without fill is just an incredibly expensive paperweight.
it is indeed.
How are they solving the actual fuel supply chain, which has historically been a massive bottleneck for the advanced nuclear sector?
That's the million-dollar question.
Here's where it gets really interesting. Because if you look at the recent price action and the momentum of the stock, it hasn't just been a slow, quiet wait for 2028. There's a major catalyst on March 9th, 2026.
The joint venture.
Right, when Oklo announced a planned joint venture with Centrus Energy.
That joint venture announcement was a pivotal moment for market sentiment. When the news broke, we saw shares trade notably higher.
It definitely caught the market's attention.
It signaled strong breakout momentum and caused a very clear pivot in the broader market sentiment. Analysts moved from a cautious, wait-and-see neutral stance to an actively bullish one.
Why Centrus Energy specifically? What does this joint venture actually do to solve that bottleneck?
It directly addresses the hardest part of scaling advanced nuclear power, which is getting the specific type of enriched fuel these reactors need. This joint venture aims to build a United States nuclear fuel supply powerhouse located in Ohio.
So keeping it entirely domestic.
Right now, domestic supply chain resilience for advanced nuclear fuel is not just a business priority, it is a matter of national security.
Because we buy so much of it abroad.
Exactly. The U.S. relies heavily on foreign imports for various stages of the nuclear fuel cycle. By partnering with Centrus, an established player in the enrichment space, Oklo is vertically integrating their operational security.
They're locking it down.
They are ensuring they have a reliable domestic source of fuel, and it is not an isolated move. They also secured another joint agreement with Nucleo for fuel fabrication. They are systematically locking down every step of their fuel supply.
If we look at the broader landscape, this joint venture seems to be happening at the perfect time.
If we connect this to the bigger picture, the macroeconomic timing is impeccable.
Right.
We are currently in the midst of a very robust, ongoing uranium bull market.
You can see it everywhere.
If you track the broader uranium exchange-traded funds, you can see significant strength and capital inflows across the entire sector. What we are witnessing is a massive structural sector rotation.
Into nuclear.
Yes, institutional capital is moving heavily into nuclear power because the broader market has finally realized a hard truth.
Which is?
The AI energy transition cannot be sustained by wind and solar alone.
No way. The numbers just don't add up.
They don't. The sheer amount of electricity required to run the next generation of artificial intelligence data centers is staggering. Training these massive AI models takes gigawatts of power, running 24/7.
And tech companies realize they need the baseload, always-on power that only nuclear can provide to keep these data centers from browning out the local grids.
That's why they're signing these massive order books.
So if you are listening to this and mapping out your strategy, there are immediate upcoming catalysts you need to track. We aren't just sitting on our hands waiting for 2028. There are clear signposts along the way to validate this thesis.
Very clear signposts.
First, keep an eye out for their P1 2026 earnings report and subsequent filings. That will give us the hard data and management commentary on exactly how this Centrus joint venture is progressing.
You definitely want to read that 10Q.
Then, looking globally, the Nuclear Energy Summit in Paris is happening right now, March 10th through 11th. China is actively advocating for global nuclear cooperation at that summit, which creates major visibility and political tailwinds for the entire sector.
It raises all the boats.
But the biggest catalyst, the date you absolutely need to circle in red on your calendar, is July 4, 2026.
Yes, Independence Day 2026. That is the target date for the Aurora demonstration plant to go critical at the Idaho National Laboratory.
And for those unfamiliar with the terminology, going critical simply means the reactor has successfully sustained a controlled nuclear chain reaction.
Right.
It is the moment a plant goes from being a dormant machine to an active power generator.
It is the ultimate proof of concept. It proves the technology actually works in the real world outside of computer simulations and laboratory scale models.
And if they hit that?
If Oklo hits that July 4th target and successfully goes critical, it is a massive de-risking event. Overnight, it transforms them from a theoretical design company into a proven operational nuclear technology provider.
We have to address the elephant in the room, though. when it comes to the AI side of this equation. You really cannot talk about advanced technology, massive data center energy needs, and Oklo without talking about Sam Altman.
No, you can't. He's central to the story.
In April of 2025, Sam Altman actually stepped down as chairman of Oklo. Now, on the surface, a high-profile chairman stepping down from a pre-commercial tech company might sound like a blaring red flag to an investor.
Usually it is.
But the timing and the context here seem to tell a very different story.
This is a vital piece of speculative yet highly logical analysis for you to consider as you weigh this stock. While we aren't seeing a cluster of direct insider buying on the open market right now to signal typical insider confidence, Altman's recusal from the Oklo board was a necessary strategic governance step.
Because of OpenAI.
Exactly. He stepped down right ahead of major OpenAI energy talks. If OpenAI is planning to negotiate massive, multi-billion-dollar energy supply deals with Oklo to power their future data centers, Altman sitting on the board of both companies simultaneously would be a massive, glaring conflict of interest.
You can't exactly negotiate the energy deal of the century with yourself in the mirror.
No, you definitely cannot.
Regulatory bodies and shareholders on both sides would flag that immediately.
Precisely why his resignation in April 2025 is viewed by many analysts as a highly bullish signal. It points to the potential for future massive energy supply deals between Oklo and OpenAI actually materializing.
Which would be huge.
It amplifies the reality of that AI data center demand we were talking about. It suggests that the 15-gigawatt order book they currently boast might just be the tip of the iceberg once the major AI players start locking in their long-term power needs.
Okay, we've covered a lot of ground on the bullish side. We've talked about the innovative fast-fission tech, the massive demand from AI data centers, the crucial government backing, and the strategic fuel partnerships.
A whole package.
But we have to look at the whole board to be objective. What is the bear case here? What are the actual risks that could derail this timeline and burn an investor? Because you mentioned some market sentiment labeling the stock as priced beyond perfection.
Yes, it is crucial to approach any pre-revenue company with your eyes wide open to the downside.
So what does priced beyond perfection mean in this context?
The phrase priced beyond perfection refers to Oklo's current market valuation compared to its current revenue. The argument from the bears is that the current stock price already assumes that every single thing, from regulatory approvals to facility construction to fuel sourcing, will happen flawlessly and exactly on schedule.
And in the commercial nuclear industry, flawless execution is incredibly rare.
Very rare. There are always delays. The primary risks are twofold. First, the high capital intensity. Developing nuclear technology, navigating the relentless NRC review process, and physically building out recycling facilities burns through cash at an astonishing rate.
Even with government help.
Yes. While their balance sheet is stable right now, thanks to the DOE, any significant delays in their timeline increase that cash burn, which could force them to raise capital under less favorable conditions.
Diluting the stock.
Exactly. Second, potential fuel constraints. Even with the new Centrus joint venture, establishing a brand new, vertically integrated domestic fuel supply chain from scratch is extraordinarily difficult.
Yeah.
If there are hiccups in building that Ohio facility, it could severely delay that critical 2028 commercialization target.
And we also have to factor in the broader world stage. We don't exist in a vacuum, and energy is arguably the most geopolitically sensitive sector on the planet.
The macro environment can weigh heavily on the stock, regardless of how well Oklo is executing its individual business plan.
Right.
There is broader geopolitical volatility that impacts the entire nuclear and uranium sector. Just recently, between March 3rd and 5th, we saw escalating Middle East tensions drag down the broader uranium markets globally.
It sent a shockwave through the sector.
When geopolitical instability strikes, supply chains get jittery, shipping routes become more expensive, and the global price of raw uranium fluctuates wildly. A spike in raw material costs or disruption in global shipping can negatively impact investor sentiment across the entire sector, pulling Oklo down with it.
So, as an investor, how do we weigh that? We have the very real risks of intense capital burn, the monumental hurdle of building a new supply chain, unpredictable geopolitical shocks, and a valuation that leaves very little room for error.
We counter the bear case by looking at the specific actionable steps Oklo's management has taken to mitigate those exact risks.
Okay.
The fear of fuel constraints and supply chain bottlenecks is directly mitigated by the March 9th Centrus joint venture. They didn't just acknowledge the risk in a quarterly filing, they actively partnered with an established player to solve it domestically.
They took action.
Right, and its severe capital intensity risk is heavily mitigated by their deep integration with the Department of Energy and their inclusion in the pilot program, which provides a safety net against toxic debt.
So the foundation is solid.
When you balance the unprecedented structural demand from AI data centers against these actively managed, heavily mitigated risks, the analytical outcome remains heavily skewed to the positive. In fact, compiling all these catalysts and risk management strategies results in a highly bullish stock score of 8 out of 10.
8 out of 10.
Yes.
So what does this all mean? If you are looking at your portfolio today and considering where the future of global energy is heading over the next decade, here is the synthesis of our deep dive.
The bottom line.
Oklo is positioned as a multi-year nuclear pure play. It offers explosive upside because it sits directly at the intersection of two of the most massive global trends of our time.
The insatiable gigawatt-scale energy needs of AI data centers.
Yep. And the long-awaited renaissance of next-generation advanced nuclear technology. They already have a staggering 15-gigawatt backlog from major tech players. They have a clear regulatory first-mover advantage with the U.S. government, and they are actively solving the historical fuel supply chain issues by partnering with companies like Centrus.
The key takeaway for you is the time frame. This is a long-term play that requires patience and a strong stomach for volatility.
Definitely.
You are investing today for the 2028 commercialization horizon. Do not get shaken out of your position by short-term geopolitical noise or temporary fluctuations in the uranium market.
Stay the course.
Keep your focus entirely on the underlying business fundamentals and specifically keep a very close eye on that July 2026 demonstration plant milestone in Idaho. That moment of going critical will be the true, undeniable test of their technological trajectory.
Before we wrap up today, I want to leave you with a final thought. We've spent a lot of time analyzing the immediate catalysts, the order books, and the joint ventures. But let's zoom out and look at the absolute largest implication of what Oklo is trying to achieve.
If Oklo successfully scales its Aurora fast-fission technology, a technology that literally runs on recycled, used nuclear waste, it effectively turns a massive, toxic liability into a premium energy commodity.
It's incredible to think about.
How will traditional global energy markets and the broader, highly sensitive geopolitical landscape of uranium mining completely restructure themselves when the waste of the 20th century officially becomes the highly sought-after premium fuel of the 21st century?
It's a massive paradigm shift, and one we will definitely keep tracking for you right here. Thank you so much for joining our analysis today. We hope this helps you navigate the massive structural shifts happening in the energy sector as you build your portfolio. Keep digging, keep questioning, and we'll see you next time.